Hello guys, this is Damyan from forexbot.com and welcome back to our video examples on a live forex trading account. We remind that the trade you will see here is with and only educational purpose. So currently I'm looking at the 5-minute chart of the euro dollar forex pair, and what I'm going to do is to buy half lot of the euro dollar, and now I will tell you why I did this. First, when we zoom in the chart, we notice two reversal candle patterns. The first one is the spinning bottom candle pattern you see here, and the second one is the hammer candle you see here. This implies that the price is currently hesitating around this level. But why is this so? Why is the price hesitating in this level? I will tell you why now. When we switch to the 15-minute chart, we zoom out once, we see an interesting thing. We see a bottom here and another bottom over here. And this is the third bottom over here. We're currently trading this bottom. When we stretch a single line through the three bottoms, we see that the price is probably bouncing from a bullish trend line. For this reason, I assume that this is going to be the third bounce from the trend line, and I believe that the price of the euro dollar will increase at least with 100% of the previous move on the chart, which is bearish. So when I place the Fibonacci level at the last correction on the chart, I get that the 100 level is probably here at the top of the move, logically. But why I do this? I do this because according to the Elliott Wave Theory, the fifth price move, so this is 1, 2, 3, 4, the fifth price move, which I am currently trying to trade, is likely to be at least as big as the previous correction on the chart. Notice that this move could also be bigger. It could take 161.8%. Here it is. 161.8% of wave 4. But the target I should set on the chart should be at least 400%. Let's draw some waves for you. First wave. I'll put them in orange. First wave, second wave, third wave, over here, and fourth wave. Okay, and now I'm trying to trade the potential fifth wave on the chart. Over here. Something like this. So now let's do some measuring. According to the Elliott Wave Theory, the second wave, which is this one. Alright, let's do some writing first. Okay, text. 2. White. Okay, second wave over here. Okay, insert text, the first wave over here. Here it is. Text, third wave. Fourth wave now. Okay. And now the fifth wave, which I'm trying to trade now. 5. Okay. All right. The Elliott Wave Theory suggests that the first wave, the second wave, I mean, should take at least, oh, here it is, the top, should take at least 100, should take at least 61, should take either 50% or 61.8% of the first wave, which is over here. The first wave. Here it is, 61.8. This means that the current trend we're looking at meets the first requirement of the Elliott Wave Theory. Then the theory suggests that the third wave should take either 161.8% or 261.8% of the second wave. So when we stretch the Fibonacci levels at the second wave, we see that the third wave has reached approximately 161.8%, which means that this rule is also accomplished. And then the theory states that the fourth wave should take either 38.2, 50, or 61.8% of the third wave. As you see, the fourth wave reaches exactly 61.8% of wave 3. For this reason, I believe that the fifth wave is currently emerging on the chart, which is the reason I'm going to trade at least to the 100th level. Actually, you know, I need to measure the third wave starting from here. Exactly. So I did a little error. I'm gonna correct it now. Here it is. Because the price did like a big top over here, and I believe this is the top we need to take into consideration. Or we can simply put it somewhere in the middle so it will look more consistent. I can place it like this or like this. It doesn't matter. The thing is that the rule is accomplished, and this is the important thing. So when we stretch the Fibonacci level from the beginning of the third wave, from the beginning of the third wave to the end of the third wave, we see that the fourth wave has reached exactly 61.8% of the third wave. And this is the reason why I will pursue a bullish price move at least to the 100% of the fourth wave. Taking the Fibonacci levels again, over here. So we have all the rules for now. The first, the second, the third, and the fourth Elliott wave. The first, the second, and the third Elliott waves rules are met on the chart, which is the reason to believe that the price is currently creating the next wave on the chart. So this is why I bought the euro dollar, and I was in a rush because I believe that the wave is currently emerging. And when I saw the spinning top reversal pattern and then the hammer candle, I was like, this is it. So I immediately bought the euro dollar, and now I'm gonna place my stop loss order. I'm gonna put it relatively loose because this is like a long trade. I mean, in terms of time and in terms of direction of the trade. So it might take like more time to be completed. So I'm gonna put my stop loss order below the bottom created between the second and the third wave on the chart over here. And I will trade for a minimum price move to the 100% of the fourth wave, meaning that I will stay in the trade at least for a price move to 1.0686. However, I'm not going to put my take profit order over there. I'm going to put it at the second target. So in case some kind of a big sharp bullish impulse emerges on the chart, I will be able to collect in case the price increases sharply to the second target. Notice that my second target is approximately in the area of the psychological 1.07 resistance. And for this reason, I'm going to use this level for my second target. After all, we need to conform to psychological levels, and we should always put some meaning in our stop loss levels, take profit levels, or even in our entry points, of course. Okay, now let's remove the Fibonacci levels over here. Now let's position the levels on the chart. So we have the two targets. Now I'm putting my entry point, which is like somewhere at 1.0666, marking it with white. And stop loss order is approximately at 1.0646. This one I'm gonna mark with red over here. All right. So we have entry point, first target, second target at the 161.8 Fibonacci level, and at the psychological 1.07 resistance. I said the entry point and the stop loss order at 1.0646 approximately. All right, now let's do some brief calculations. So if we accomplish the first target, we will account for a profit of 20 pips, which is 0.0020. When we divide 0.0020 by the entry point, which is 1.0666, we get 0.001875. And when we multiply this by 100, we get our percentage profit from this trade, which is 0.1875% profit is what we're aiming for in this trade. This is the minimum. I repeat, this is approximately 0.90% or 20 pips. If we hit the second target, we will be adding 14 more pips to our profit. So this makes a total of 34 pips from our entry point to the second target. When we divide 0.0034, which is 34 pips, when we divide this by the entry price of 1.0666, we get 0.00318770. When we multiply this by 100, we get the percentage profit in case the price hits the second target on the chart. And this is 0.3188, which is approximately 0.32%. So if the price reaches only the first target, we'll profit 0.19% from this trade. If the price goes to the second target, the profit will be 0.32% of the amount invested in the trade. So now I'm going to pause the video and I'll come back to you later to see if the price is going to reach the target of the fifth Elliott wave. Okay guys, I'm back about 3 hours later to show you how the price action of the euro-dollar forex pair is currently approaching my first target on the chart. Notice that the price has increased sharply as I expected, and it is currently close to the first target. So in this relation, for this reason, I'm going to adjust my stop loss order so that I will be able to close like 1/3 of the trade, and the profit, voila, now the trade is 100% winner. and I have locked in some guaranteed profit between 1.0672 and 1.0666, which is like 6 pips profit for now. And there is absolutely no chance that the trade is a loser. The trade is already a winner. And I've locked in 6 pips profit, which is good. And the even better thing is that we're still in the market, we're still in the trade. So I'm still observing my trade and approaching alternatives to close it at the first target maybe, or if the sharp increase continues, I will stay to the second target. You never know. The best thing is that the trade is a winner. And now I'm gonna pause the video again, and I'll come back to you later to see how is the trade developing. Okay guys, I'm back about 30 minutes later to show you what happened on the chart. After the price was consolidating around 1.0677, 78, 79, somewhere in this area, suddenly the price shot down in bearish direction, and this happened due to an outstanding ADP non-farm employment change report coming from the United States. The announcement was for 263,000 on a forecast for 187,000, and this stimulated the dollar versus the euro, and the dollar increased sharply versus the euro, sending the euro dollar forex pair down over here. But the best thing was that I adjusted my stop loss order above my entry point. I adjusted it at 1.0672 on a 6 pips difference, which means that I closed profit after all from this trade. My profit was for 6 pips, and now I'm gonna calculate. I'll calculate how what is the percentage profit from this trade with dividing 0.0006, which is 6 pips. I'm dividing it by my entry price at 1.0666, and I get a result of 0.00056255. And when I multiply this by 100, I get a result of 0.056%, which is approximately it is nearly 0.06% profit from this trade. 0.056, which when rounded is like 0.06% profit. It might be said that I might made a mistake in this case by not closing my trade over here. However, it was very hard to perform this since the price simply flashed up in bullish direction, and I did not manage to do it on time. So I consider that the best thing in this trade is to adjust my stop loss order on profit above my entry point in order to lock in guaranteed profit, because after shooting close to the first target at 1.0686, the price started hesitating in the 1.067978 area over here, and I thought that closing the trade like slightly above half of the first target, it's not a smart move in this case. But now when I'm looking at the results post factum, I realized that it would have best that if I have closed my trade over here or even over here, but it was very quick. So I can't say that I did a mistake, but you know, it's never possible in forex trading to always do the best thing, you know. So the best thing I can do in this case is just to, learn from my possible mistakes and try not to do them in future. So thank you very much for watching. This was Damyan from forexball.com. Looking forward to see you on the next live forex trading session. And until then, I wish you happy trading.